We made it, Pat. Made it to another Friday.
Yep, they come quicker and quicker every day, it seems as though.
Every week. I don't think it's going to happen, but it happens. So I plug along, and here we go. Now, I'm not going to be on Monday morning like I usually am, 8:30. I'm going to a YouTube conference in Las Vegas for a couple days now. And, of course, people know that if you and I can't make it, we have our stunt doubles ready to go.
Yep.
But if I'm gone, I'm just not on. So, and do us a favor, everybody, give us a thumbs up today, just for the simple fact that we made it to Friday. You got to like that. We had some early comments come in. I'm going to address them in due time. It's kind of a interesting day. I called next week ticking time bomb because everybody thought here comes March, rates are going to change. They're going to go down. It's just going to be the beginning. And that time bomb, somebody went along with the scissors and that fuse and went, took it out. Not going to happen. After Friday's inflation report, Fed funds futures show Fed rate cuts might begin in September, Pat. The futures indicate a 45.6% chance that they'll lower its benchmark rate.
This is going to be the year of the guessing game, I guess.
That's a far cry from 4 to 6 rate cuts. Here they come. Hang on. It's going to be a busy spring.
It's amazing how this market's changed from last October, November, December in terms of expectations. I mean, you step back, obviously I'll go over the chart, but I mean, it just seems as though that this market's been really data dependent every week. Just on one little miss, one little juggernaut that comes in through the numbers. So it's gonna, like you said at the beginning of the year, I said it's gonna be a sloppy market. This is tending to show that it's gonna be a sloppy market through this whole year.
Well, and like you just said, it's one little data point, one little miss, but man, what's going to happen if there's a big one? I mean, then the market's ready to jolt. Pandemonium, good afternoon. It's ready to spring either way. I don't think it's ready to spring and get hot. I think this could be a early summer of surprises. But I've got some numbers here that I've dug up, Pat, and it puzzles me. And I want to make sure bear with me while I talk amongst yourselves. I'm going to move some data here and make sure I've got the most current number on my 7-day moving average. I think I do. No, I didn't. Okay. Glad I checked that. So I'm going to roll this out more like a question than an observation, and especially for the audience, and ask you to tell me what you think this means. Because this is unusual, Pat. In other words, look, this is our new listings. They've gone down the past 2 weeks. Our contracts have not gone down. They've actually gone up. The gap between what was about 76% here between new contracts and new listings is now sitting here. You can see the ticker below. I think, what is it, 85%? That's a huge move. And this is right in the face of rates going up. You can see new listings, 3,092. New contracts, 3,258. Difference of 591, contract ratio 85%. So I'm curious, Pat, is people aren't listing their homes now. And when we have a question here from Bebop, I'm going to answer you that question before. Jackie's not going to be on for a few minutes. She said she's going to jump in, and she's still recovering from shoulder surgery, and she has to type with her non-dominant hand. So forgive her spelling errors when they show up. But
girl.
So yeah, it's been tough for her, folks, but she's a trooper hanging in there. So Pat, people are choosing right now, this week, not to list their homes. So are they not listing because they think rates are too high and they won't get a sale? Or are they not listing because of the news of big changes coming in the summer and everybody's going to save money on commissions and it's going to be a whole different world? What do you think?
It's probably a combination of both, honestly. And just to give you the middle of the road answer. I mean, there's a lot of confusion out there with the agents, what they're going to charge, and I think certainly the volatility in rates. The last April, this whole month of April has not been good for rates. I mean, yeah, we had a jolt the other day, but I mean, this jolt was starting about 2.5 weeks ago. So it just once again, it's just that combination. I think the volatility, rates moving up, the seller becomes a buyer. So I mean, I think it probably is. There's some reason from I think probably more from the rate side.
Sellers don't want to sell because they know they're going to have to buy at a higher rate, so therefore they're not listing their home.
Yeah, I mean, once again, we're getting a
the
low
conundrum
volatility.
is if the seller lists their home, it's probably going to go pretty good.
Yeah, and I just think that once again, I've talked about this last year where volatility and rates moving up. People if they list, they're like, well, now they've got to reconfigure what they're looking at buying, because for every seller, for every buyer, there's typically a seller and vice versa. So it's one of these things where rates have just been they've been very sloppy really since the beginning of April. It's the last week has been, I mean, to go back to my chart, to jump in real quick. I mean, since April 10th, I mean, we saw that sell-off April 10th, but realistically, it's been really since right about here, end of March, beginning of April is when we've seen this decline in rate or increase in rates, decline in mortgage prices. So I think that is a lot. I mean, once again, I think we've seen elasticity of demand when rates do go down. We see demand pop out of the woodwork.
Yeah. I think so. It's the demand, but demand though is sitting there still at 3,200 every 7 days. We were 29, about 300 more than normal. It's interesting. You look at the Cromford Market Index, and you can see here that the winners here are still Chandler, Gilbert, and Glendale. And Pandemonium here's got a comment that said, "Have a friend selling a house in Goodyear, and she's on her second price drop, roughly 20,000 from the original list." Well, here's Goodyear. They're way down here, 87. That's a buyer's market, not a seller's market. They went up 9% for the month, 9% in the index, not 9% on the price. And going down 20,000, you really have to look and say, well, did they start out too hot? Did they come in at market? There's a lot of competition out in that area with new construction. So everybody that's in an area, new construction, is getting hammered right here. Surprise, Cave Creek, Goodyear, Queen Creek, Maricopa, and Buckeye. There are not enough lots available. And they comment here in the Cromford report here and say, it's much easier to create new supply in the outlying areas. But as we move towards the center of the valley, supply gets tighter and the market starts to increase in favor for sellers. And that's what's going on. Now, if we look at inventory, or this is number of price changes per week, they've gone up a little bit, 23.18, 21.24. So people have been having to go out there and lower their price. And here's why did price rise 19%? Is this a value normalized by number of sales? I'm not sure I get that one. Bebop, let me ask you a question. Are you an agent by chance? And I just curious. Here is new listings by month, Pat. I tell you, here it is. And what do? I took the chart off. 63.98 in April down here. And if I go to last April, we had 72.91. So we had more new listings last year than this year by month. If I go the year before that, 10,000. Okay. So the number of new listings that we're getting are radically lower than what 30%. We've experienced a long time. And here's where we're at. So Bebop, you asked a question. I know for Jackie here, what are your thoughts on the increase in new listings heading into summer? Can you agree we're going to see a summer swell in inventory at this current rate? I don't know what she's going to say, but I'm going to say I don't agree because this current rate is pretty lethargic. Look at that. Going into summer, which is going to be right here, I think we're going to be right here maybe. But we're only growing by, here's 15,585. 15,686. That's up 100, up another 100. That's not going to give us a huge bump of inventory for summer, is it?
No,
It doesn't
no,
look that way.
it doesn't look that way.
And if I look at our new listings, the new listings that are coming on, they're not building. We're still sitting here at 17,400 listings. It's almost exactly what we were last Friday. Now that differs from what the Cromford report gathers, but we're stuck. Everything we look at is stuck. Hello, Stephanie. Good to hear from you. And YouTube, my favorite YouTube name. Now, if I look at listings canceled, so if the market's slowing down at the struggling, canceled listings tend to spike up, and they did last week. They went from 291 to 486, but then they came back down to 413, a little bit higher than the normal range, and probably happening in the outlying areas, not Chandler Gilbert. Expired listings year to date are not exceeding last year, so they're not pulling them off the market. You know, they're not expiring. So, and then the other news, Pat, you see this too. Single family delinquency rates 90 days prior or in foreclosure. This is from Fannie Mae and Freddie Mac. Look where they're at. Now, this is going into January 2025. So I don't know what they're at today, but they're pretty low in 90 days late. Of course, this is when you had the mortgage moratorium, right? So,
yep.
But rolling into next week, I mean, I don't see any huge surprises either way. If, you know, there's always chatter that they may raise the rates. Do you think there's even a smidgen of a chance that's going to happen?
I heard on this one pundit say on the Fox Business News saying that there's, if anything, they would maybe raise rates. I tell you, if they raise rates, who knows what's going to happen? I mean, it's obviously going to have a effect on the debt that we're issuing. It's going to, I think it's going to cause a lot of instability in the market if they do move rates up.
Oh, that'd be the shot heard around the world.
That would be the jolt.
Surprise me.
That would be the jolt. I think that would cause, if I was Powell, I think raising rates would cause more instability than just leaving them alone.
Yeah. Yep.
I just that basically would say that they're still behind the eight ball. Once again, there's just too much federal spending going on. The fiscal and monetary policy are not in sync at all. That's the whole, not to get political. I'm just saying it like it is. You can ask any econ guy or finance guy, and they'll say it 100 times that we're spending way too much money. And the GDP, that had decreased. There's talk about, last couple of days on the news about stagflation. Things are slowing and prices are still sticky. We're just in this sticky environment right now. I don't, if people are looking for something to change, I'm getting a sense that people are buying homes that have to or want to or need to. There's just not a lot of market out there for people say, hey, I'm going to go out and buy a new home. Most of this activity is built around the fact that people are, like I said, either need to, really want to. There's not this regular velocity in the real estate market right now. So,
well, I agree with you on the level of spending. I mean, it's just there was so much spending that happened last year that it hasn't worked its way through the system yet. So expecting inflation to come down, that's nothing but a wish. I mean, I don't see it. I don't see it happening. And I mean, it's going to take another probably till August to get through it. I want to show Bebop here was asking why did Paradise Valley go up by 19%? And this is the best chart to look at right here. So if you can look at Paradise Valley, their supply index is 69.8. In other words, they don't have a lot of supply. And their market index is 108. 110 is considered a seller's market. But their demand is down a little bit. So what happened, I think, this week compared to last week was their supply went down somewhat. So if any one of these move in opposite direction, if supply goes down and this demand goes up just a hair, then the total index will increase, which is this middle number right here. It's proprietary data with Crawford Report. And Bebop, if you are an agent, I recommend you subscribe to the Crawford Report and dive into it every morning because it's worth the money, my friend. I think, I looked at, Quentin here says if they raise rates, I think we're going to have quite the correction. If they raise rates, now what we've been watching this whole year is every time they get on, they give us a 25 basis point decrease. Rates haven't moved. They maybe went up that day. If they actually went in and raised us by 25 next week, would the bond market react to that by going up, or would it be another "I told you so" moment? I saw that coming.
I think it'd be my 2 cents worth. I think it'd be it won't be a "I told you so" moment because the market's not expecting that at all. So,
and if they lower rates, I like how you describe it. You go, once they lower rates, they can't turn around and raise them. It's like putting toothpaste back in the tube. So,
yeah, I just think they're kind of stuck in this no man's land that they have been the last several years. And
I tried that this morning too, just to see if it was hard as you said it was. And it ain't great. It's stock market will be a disaster. Yes, if they do raise rates, it's going to be a bad day for the stock market. I don't think they're going to do that. The numbers are going in their direction. They're just not going in the direction fast enough. And I think they're getting down to like an inflation rate of 2.7. They're going to eventually go, okay, well, that's good enough.
Yeah, I mean, once again, it goes back to like you said, their numbers are antiquated from several years ago. So I think to get to 2%, I think they put themselves in this corner now by saying they got to get to 2%. I think quietly I just don't. What number when they hit that? I mean, it's kind of like any type of you're trying to get to a middle number, and once you hit that, the momentum will keep it going the other way.
Yeah,
I mean, I think the Feds have to say, okay, we want to get around this because whatever momentum you've got going toward that middle number toward that 2%, I'm going to be a betting man that once something is in motion, stays in motion, keeps going. I mean, if you hit 2%, it's probably going to go to 1 or it's just like, so I think they're going to kind of be that's just my simplistic way of looking at it. Things are sticky right now. They get monetary and fiscal policy put together. It's just going to be an interesting, tough, not a tough year, but just a frustrating. We're going to have little spurts like this last month since April. We've had rates move up really, since the beginning of April. They're kind of stabilizing the last. Well, we had a little fart, Wednesday the other day on Wednesday, but I mean, really since about, like I said, the beginning of April to middle of April 10th, we saw it's just been now it's kind of forming a base there. I mean, we might see 5% on the Treasury. Who knows? I mean, I'm just trying to look at day to day, trying to gauge see if there's some type of pattern. This pattern that we're going to be in this for another several months.
Yeah, and that's why I always just only like to look out. I mean, I'm stretching myself talking about summer right now, and I'm looking at the data for the past 2 weeks, and I'm looking at it and going, wow, so rates have gone up and new listings have come down, and yet sales have not fallen off a cliff. Mm-hmm. And so that's why, I push back a little bit on, are we going to see a surge of inventory in the summer? Well, not at our current rate, because I'm going to use the same analogy you just gave as once something's in motion, it's in motion, right? And mm-hmm. We're just like only adding maybe 100 homes a week onto our current total inventory. And it's not enough to move the bar. The Fed needs multiple months of 2% inflation to decrease rates. 1 month isn't enough. Well, the chatter out there, and that may be true, but the chatter is, and the worry is that, will he blow past the 2% rates before they, stop this tightening? Mm-hmm. And mm-hmm. now the train has left the station. Now you're in big trouble.
Now you're going the opposite way.
Going the opposite way to Stephanie's point. You're going to end up with stagflation. Yeah. And stagflation, for those of us that grew up in the 80s, that was a tough time.
I think we're kind of in that moment of stagflation right now. honestly.
How elastic are rates in new listings? What is the delta? I'm going to pass that one to you, Pat.
I don't know what the delta would be, but I'm just being a simplistic guy. Like, yes, there definitely is a lot of elasticity to demand and at least demand on my end. Listings. Yeah, I think what the delta is. I haven't seen any data, to say this is the change. There probably is something out there. Could dig into it, but I just see from my standpoint, I see when rates do go down, like they did last April, May, into the high fives, we were relatively busy. It's been steady, but it hasn't been any barn burner out the door recently. So
this is a new development people have asked me about called Blossom Rock. It's going to be out in Apache Junction. It's going to be out here, Pat, way out there. So, you live way down here. And this is, so when you buy your helicopter, anyway, my broker, Jessica, is going out there tomorrow. They're having a big open house event out at Blossom Rock. So you might want to go out and check that out. She's going to go out there. So if you have any questions about what they're building out there and what kind of plans that they have for it, hit us up, and Jessica will have all that information for us.
Yeah, she knows East Valley.
Go ahead.
She knows East Valley very well.
She does, yeah, especially East Mark. She's helping with Casa Grande with one of our subscribers this weekend as well. Now, we talked about the big changes coming in July, and I saw another article yesterday about a New York Times that was just as wrong as every other article that they wrote, that in July commissions are changing, and okay, fine. Let's just wait and see what please just write an article that tells the truth for once. But why get off on a tangent? So I said, you know what? Real estate's going to change. It really is. It's, tech is coming, artificial intelligence is coming, and people, they're sellers. If sellers don't offer a commission to a buyer's agent, which they don't have to now, they're not required. They were required to, but they weren't told how much. They could have offered $5. So now NAR saying, well, not only are you not required to offer one, but we're not going to let you post what it is. Well, great. Thank you. That's very helpful. But if you don't want to post one at all, let's say, Pat, we're selling your house, and I come to you and go, Pat, we're going to list your house. You don't have to offer a cooperating agreement with a buyer's agent. So what amount would you like to list it at? And you say 0. Will you then lower the price of your house?
Mm-mm.
Then why do these lawsuits?
That wouldn't have any effect on me. I'm just
Department of Justice is saying this is going to be very good for buyers. How so?
Yeah.
Because Pat's not going to lower the price. He's going to go, Yahoo! I'm saving on commission. I'm still asking $500,000. So then I said, well, what if you don't want to use a buyer agent and you think you want to go for it by yourself? Because we do more than just write contracts, folks. But what if AI could do that? So I looked at this today. I'm going to buy Pat's house. So I said, write an Arizona real estate purchase contract with a price of $500,000 with $50,000 down payment, $5,000 earnest money deposit, 10-day inspection period, asking 2% for seller closing cost contribution, closing on May 30th, 123 Main Street, Phoenix, Arizona, between Rick McHone buyer and Pat McMaster seller. Let's see what happens. I send it to ChatGDP, and here comes our purchase contract. Now, is this the original Arizona purchase contract? No. Is it close? Well, it's a lot shorter, but I bet your bottom dollar that AI is going to help filling out these purchase contracts a lot easier. You just type in your terms and spits it out. Pretty cool, huh?
Wow.
Now, let's say that you were a buyer right now and you wanted to write your own contract.
I'm not signing that contract, though, if you want to try to suck me into this.
Well, I thought you'd be. Yeah, well, okay, fine. You're saying no to the 2%? But,
yeah.
So currently, you can write a contract like that and you can send it to a listing agent. What that listing agent's going to do is he's going to put it on the official Arizona real estate form and zip it back to you as an addendum. You can write a contract on a napkin if you want to. So But it's going to be an interesting time. I think it's going to be a lot of confusion, the summer confusion. Bebop says, unfortunately for us agents, we're headed back to the same fortune as stockbrokers back in the day. Online brokerage is over, and we will have the same fate. Hard to tell.
Well, you know
Hard
what?
to tell.
I mean, I can chime in on that because I was a stockbroker from 87 to 97. I mean, yeah, to a certain degree, correct. But, you know, I in 97, I got out because I get just tired of, you know, people were like, well, I'm going to check that. I was a kind of a pure stockbroker. But I got kind of tired of like, well, let me check it out. Let me check it out. In the end, there's still money managers. There's still people, the last 25, you know, since 97. So that's, you know, 27 years. I mean, there's still money managers. It's not like they went away. I mean, and quite frankly, people still need guidance. As much as I saw people, the Charles Schwab started coming out when I was, like I said, 95, 96, 97, kind of like online trading. Yeah, I saw a little bit of that, but you know, I was doing some high level option trades for a couple guys at Intel, and you know, they're going through Schwab, but they were still calling me for advice. Say, hey, what do you think? I'm like, well, you're on your own. So, because I mean, I mean, and they were still begging for advice. When should I sell it? When should I, you know? And I was like, well, I helped them out a little bit, but I'm like, well, you did this on your own, so I can't. And I think that's going to be. Correct me if I'm wrong. It's going to be somewhat real estate. I don't think agents are going away. Yeah, it's evolving. There are some things that are going to change, but I don't.
Well, if you're a seller and we're listing your house, Pat, and you and everybody else has said they're not offering a buyer's, you know, cooperating agreement, you know, because, you know, it's your listing brokerage pays my listing brokerage, and then the splits are all different, whatever you negotiate, and everybody else is saying zero, and you come out and go, I'm going to offer 2. You'll probably win that game. You'll get more attention. You'll have more professional agents helping with the transaction versus going it alone. Because if now let's say I'm the listing agent, I've listed your house, and you've decided to offer 0. Well, now I'm about to bite off more than I want to, because somebody's going to come in and be unrepresented. Yeah. And then we have to sign an agreement that says, okay, I'm helping you as an unrepresented buyer, but I have a fiduciary duty to you, Pat. So to everything that you want and you need and your price that you want, when the inspection comes, I have a fiduciary duty to make sure you get what you want. And the buyer, just tell me what you want fixed, and I'll let Pat know. And Pat, you can go tell him to pound sand. Well, Pat says to pound sand, he's not going to fix anything. Well, nobody else is negotiating on behalf except you. Yeah. And if there's a deadline coming up, and I've got to call you and remind you of every deadline, every time an unrepresented buyer comes to me, I'm going to go, oh gosh, now I'm double managing this transaction. It gets tough. And not only that, I'm opening up myself for more lawsuits.
Well, I think in the end, like Stephanie said, the agents may team up with real estate attorneys, but you know, if you get a buyer that's not represented, you get the seller. I mean, I just, my simple mind says that this is going to end up in the buyers getting ticked off, suing. There's going to be back and forth suits, misrepresentation. That's as simple as I could see it.
Is the NL versus NC ratio correct? It looks like more homes went under contract than were listed. Let me take a look here. He may be right on my math. Let me check here. Follow along here. I'll go all the way down to the bottom. Here I got because I typed this in the last minute just for the show here. So, boy, I got to go down a lot farther than I thought. See how long I've been doing this, Pat?
Wow.
38.49. So there is a correction that has to be made there. Let me do that live on the air, folks. While we're here, it's new contracts, new listings are 38.49. I only included right here, which was new listings, but not back on market. So thank you for pointing that out. And I have now corrected that. See, our audience is so flipping smart. I'm telling you. We just don't, you know. That's why we have millions. I mean millions of the viewers. So thanks, DC. Bebop says, do we know what the penalty is for not getting the signed broker agreement before showing open homes yet? I can't believe we have one signed before we can show home. They've got it approved, Bebop. They're going to implement the changes, and then local MLSs have to discuss it and see what they're going to do. So we don't know. You're waiting it out. Feels like we have to sell ourselves first, twice the work for half the pay. I don't know. It's how long have you been doing this? What do you think about buyer's agent commission being tied to the amount purchased under list price? Basically, pay for performance. I think you're going to see a lot of creativity. I think you're going to see a ton of creativity. Control arrow down. Yeah, I could have done that. So they blame it on Pat. That's the best comment all day. Blame it on Pat. I think there's going to be pay for performance things come up. There's going to be all kinds of different ways to look at this. It's funny, but
then I'm just being devil's advocate though. Then you can start getting into discriminatory. You got a lower price for this person because they're blue versus this person because they're pink. I'm not. It's just
there's a lot of liability in that. So in other words, so you're going to sell you're asking 500. You're asking 500 for your house, Pat, right?
Huh?
You're asking 500 for your house, but I get paid more if I talk you down to 450.
Yeah. I mean, I think there's going to be have to be some standardization, like in our business where, we're capped at a certain amount. I think you're going through what we went through with Dodd-Frank back in 08, 09, and 10. There's just obviously an adjustment in how what we're paid and how we're paid. It's as simple as that. I mean,
there's so much confusion on this.
There's going to be misrepresentation, and there's going to be a lot of, I feel bad for the client, the borrower, and the person who's going through this because they're going to be told about 13 different things this Sunday, what's true and what's not true.
Well, I got a call this week, and she said that she's going to have her daughter-in-law give me a call. She said, we're talking about listing their homes, and she says, or not listing a home, they want to buy another home. And she said, should they go through 999.com? And I go, that has nothing to do with buying. That's a listing gimmick. That's the old listing gimmick, like 999.com. I mean, it's all, well, aren't the laws changing? I'm like, yeah, no. I mean, we haven't seen anything yet, and they can change that now. I mean, if you want to list your home now and not offer commission, you can do that today. You don't have to wait to a ruling or for a ruling for July. Do it today. Looks like we're going to go through it. I'll be going through it soon. I'm moving to Arizona this summer. I don't know what you're going to go through. I don't know
where he's moving from.
Yeah, where are you coming from, John? And you got my phone number, right? Stephanie, the irony is the average attorney will not be as familiar with a real estate contract compared to a realtor. Are attorneys going to jump in? And how much are they going to charge? So $250 to write a contract from California. Welcome. Gee, that's never happened here. So yeah, $250 for a contract, $300 to negotiate repairs, $250 an hour to do this. Attorneys are, every time you pick up the phone, it's cha-ching. Every time they answer an email, it's cha-ching. That's what my ex-wife did to herself. Hey, I have a question. Push the button.
So it just seems like it's my cynical self says it's gonna be a payday for attorneys down the road.
Yeah. I don't see a lot of attorney involvement in. It's interesting. My friend's selling his house down in El Paso. Now, El Paso is not an attorney state, but the brokerage down there gave him a cost breakdown. And inside of it, they put down for his net proceeds a $250 attorney fee. And I said, why are they charging you $250 for an attorney fee when you don't need attorneys down there? And your son-in-law is a real estate attorney. He goes, I don't know. I go, and you signed it. It's just $250 attorney fee. I had to have an attorney in upstate New York. He was sitting at the table. The buyers are sitting on the other side, the sellers sitting on the other side of the table, their attorney. All they did was this. Yeah, it's fine. Go ahead. You sign it. Then you get the next piece and they go, yeah, that's good. $150. They go home. We did that all day. I'm not dissing attorneys, but I'm saying in real estate, sometimes I don't get it.
Well, just another, it's just going to add another hand in the pot or in the deal where you got, buyers, sellers, buying agents, selling agents, processors, mortgage people, appraisers, title people. It's
well, July's going to come. They're going to say you're not allowed to put the buyer compensation in the MLS, and I'm going to look out there and go, okay, who's first? Who wants to offer nothing? Who's first?
Yeah.
And I don't know. We'll wait and see who wants to be first. I don't think a lot of people are going to try it, and they're going to call a listing agent and go, how come nobody showed my home? Well, we're not offering them anything now. Now, there's another way to go about it, in that we can write an offer and ask for buyer broker compensation somehow through.
You can write in the contract. Just write it in the comment section. Right in the comment section of like seller is going to be just like they do with the regular contract right now. Seller is going to give the buyer a $10,000 concession for closing costs. The seller is going to pay the buyer broker X amount, 1.5%, 2% or 2.5%. Right there.
Yeah. They've just taken something that was very simple and made it very difficult now.
Yeah.
Not difficult to get, difficult to communicate. So
yeah.
Now that's why I'm offering my consulting for people. As we get closer to this, you have any questions, you can use the link below and book an hour with me. And I can walk through all the different scenarios and what you can do, how you can buy a home on your own, how you can sell a home, without offering a buyer commission. What if you wanted to? What are some of the things you should look out for? And just walk you through all the changes that are coming. Because if you're just going to read the news, or hate to say it, listen to the president, that information's not right. He came out and said, I'm so glad to hear that agents agreed to lower their commissions. No, that was never part of the conversation. Never. No. Not even close. So, well, next week. So when is the Fed meeting? Wednesday?
Wednesday. Friday. We got Friday, Monday, just according to MBS Live, we got Treasury, get an update on the Treasury borrowing needs on Monday. Then Wednesday, they get a Fed announcement containing how they're going to do their balance sheet runoff. Powell's going to have a press conference on Wednesday. So, and it says even before this, the Fed was already questioning whether it would be able to cut rates at all in 2024. The PCE data arguably writes these questions are in ink. Those questions in ink, I guess. I don't know what they mean by that. And Friday is the big jobs report. So see what happens on Wednesday. Wednesday, obviously, he's gonna probably, once again, they haven't done anything and the market has just adjusted accordingly. The mortgage-backed security market and the treasury market.
Yeah.
They can do the job of the Fed sometimes on its own. So we'll see.
All right. Well, just be another interesting week of what we call muddling along here in the Arizona real estate world. So,
yeah.
Pat, thanks for joining me. And to the millions and millions of people, 30 million today. That's pretty good.
That's good.
Good. We glad I got a good connection here. So we got a couple quick comments coming in here. And PR says, as long as government prints money, rates cannot be lowered. They have to pay for that somehow. Ugh. Yeah. And saying as long as the printing press is on. But I mean, there are so many different scenarios how this could unwind. But inflation coming down quickly does not seem to be one of them. And I think they're going to end up crying uncle at some point. But like I say, I only try to look out as far as summer. Beyond that, I'm going to leave it up to smart guys like Pat. So,
yeah. This market's making me look stupid every day.
No. You've been right for several months here, so that, don't run away from that. So
true. Yeah, I just try to look at the numbers week to week, but I just try to look at just overall trends. Like you said, the trend right now, we're starting to see a trend developing, and it's not it's not going to be positive for a while. I mean, so just it is what it is.
All right, we'll muddle through it. Have a great one, Pat. Talk to you
Take
soon.
care, everybody.
See
Bye-bye.
ya.